Hello, everybody. Kirk Spano. It is January 7th, 2026, and I am going to do my 2026 outlook here in about 15 or 20 charts. No video of me. Want you to get to see the entire charts. And if you hear this without seeing it, you can go to fundamentaltrends.com and get the chart book and the article for free, which I will have up before I leave for Disney in a couple of days. As everybody probably knows by now, there was a horrific shooting in Minneapolis today. ICE agents were angry at a woman for harassing them when their car got stuck in the snow. I'm not excusing whatever behavior this woman exhibited, but she was not a terrorist, and she was trying to flee when she was shot in the face and killed. So I'm not going to play this video because it's very graphic. However, I just want to make it very clear to people that I do not agree with the approach that ICE is taking. That does not mean that I'm okay with illegal immigration. It means that I have problems with a lot of things that have gone on for a lot of time, but that this approach to solving our problems is wrong. It is fascist, and it is blatantly unconstitutional. At the moment, that doesn't matter. So I will implore you, if you are somebody that likes to own the libs, if you are somebody who thinks that ICE is just doing their job and that illegal aliens should all be thrown out of the country, please quit my service. Don't watch the rest of this video. I really don't want to help you make any money. If you are conflicted on a lot of these things like I am, if you think that there are better approaches to solving our problems, if you believe that extremism is the biggest problem, along with divide and conquer politics and massive amounts of money flowing uphill with the 1% becoming the richest and just becoming overwhelmingly powerful, then in your consideration of the world, without going nuts, without being the person who threatened my life today for the first time, I got a death threat, then stick around. I'd like to help you make money. So I'm going to take this down. But if you haven't seen what happened here, before you jump into the hysteria, before you rationalize an ideology, before you legitimize something that just can't be legitimized, good luck trying to figure it all out, because that's all I'm trying to do too. What I do have figured out to an extent, that's why I have become a 2%er, I guess it would be. I understand that liquidity drives markets. And when liquidity is rising, the markets do very well. There's a narrative out there right now that the liquidity in the global system is going to rise from this bottom quintile that it's been in. And that will happen. Because as I've discussed multiple times, and I will show you the reasons why in just a moment, all roads lead to QE. We will get more quantitative easing at some point. I don't know the path to getting there. I don't know the time frames. I suspect it won't be as sudden, large, and violently inflationary as it was the last few times, especially during COVID. I don't think we're going to see a repeat of that. We're seeing something more nuanced, more subtle, and if it works in the short term, we might get a blow off top on the stock market. If that happens, then the crash that follows will just be greater. Because again, as I'll show you in a moment, the approach that they're taking is a Band-Aid for a gaping axe wound to the head, to a gunshot to the face. Not going to help very much. This is from Raul Paul, and he expects that liquidity will go up. And I think that he's right. But it might touch this bottom green line again. And if it does, or if it just chops around in here for say the balance of the year or through the midterms, then the markets will capitulate. They'll give up. And there is something that I will focus on the end that should make you think. And I want you to think the way I think. You can throw it out when you're done with the exercise. What I think is that there's a huge possibility that the world, which has been pouring money into the United States for 5 years, and especially since the April correction, is going to pull back in an attempt to influence the midterm elections. And I think that pullback might last 3 years as they invest in their own economies, and the emerging markets, and many do to us what we've done to many. For all the America First people out there, I want you to understand where that phrase comes from if you're not fully aware of it already. It essentially was a fascist approach in the United States that led to some very bad things about a century ago, not quite a century ago. And the rhetoric being used, I believe, is deliberate to trigger people, to manipulate them, to brainwash them. And it's interesting to me, the more educated versus less educated respond to it. President Trump has huge support among those who are less educated. That does not mean that their opinions are less valid. It means their solutions might be less valid, but their concerns are real and need to be addressed. My argument isn't against them. My argument is that what they're asking for is counterproductive, and that there are people in the world, many in government and industry, business, that will use a type of divide and conquer politics as distraction and misdirection to get more money and more power, and turn that into a cycle of more power and more money. And this isn't something that's new. Go back and read George Orwell. Study, read. When I say something like, when fascism comes to the United States, it'll be wrapped in a flag carrying a cross, I wish I could have come up with something so profound, and that appears to be true. All these things matter in the context of how the money moves, where the money goes, and what is my central thesis of everything financial and monetary and investment linked. What is my central theory of business, of government, of life in general? Follow the money and you'll know basically what's going on. So I think you should really think about following the money even more third and fourth level chess style, because the surface statistics, and I'll show you some surface statistics and incorrect, in my opinion, analysis, because there is a reaction to our actions that is coming. And it's not that new. And it's been festering for a very, very long time. If you haven't read Confessions of an Economic Hitman by John Perkins, I think you should. It'll give you some perspective. If you want one good book on history, Clark Clifford's memoir, one of the best books I've ever read. It discusses his life of being in the room. I've told you the story about when I met one of Scott Walker's advisors before an Exact Sciences annual meeting. And we were talking, and one of the things he asked me was, what else would you like to write? And I said, I'd love to write a book about being in the room, being a fly on the wall everywhere that Dick Cheney's ever been. And by then I knew he was working with Scott Walker. He hadn't told me, but I had figured it out. Thought he would like that a little bit. But it's true. He said, why do you say that? I said, Dick Cheney has been in American politics for decades, since the 70s. He's been in, or one doorway removed, for probably more than anybody ever had been from the 70s to the 2000s. And he looked at me and he turned his bar stool towards me, right? You're sitting at a bar facing the bar. He turned towards me. He goes, I've known Dick Cheney 40 years. What do you want to know? The ability to try to think about what is really happening behind closed doors. And I've had a little bit of minimal access from my days back on Market Watch, and being able to call people and say, hey, I'm writing for Market Watch, which is owned by the Wall Street Journal. They talk to me. Every now and then I pull that with Seeking Alpha. It gets a little bit less respect. But what I'm thinking about right now is, what is the reaction to America's behavior financially, economically, over the next 3 years or so? I think that's an important question. I think it's going to have an impact. And I think that the valuation expansion that we've seen in the markets amid the mega caps, and some of the AI names and quantum computers and crypto, I think those valuations come back because the money that people are going to be willing to throw at it is going to come down initially from those who just don't want to be involved with us or want to punish us. And that could cause a cascade. This chart shows global liquidity and the total crypto market cap, which I don't talk about a lot, but I think it's important because this is money that can just be just destroyed. I don't even know the right word. Vaporized. We've seen a divergence lately, and I think that might continue, and I think it might get more violent. I think what we saw in 2022 is not only possible, but likely. And I think the more speculative investments like crypto will lead the way. And that wipes out a lot of the marginal wealth effect that's out there. It sets young people back because they're by and large the marginal investors there. We talked about how a lot of crypto whales had woken up Bitcoin wallets from a decade ago, going as far back as 2011, from what we can tell, and liquidated billions of dollars worth of Bitcoin. I told you that I sold 3 of the 10 Bitcoin that I owned, that I had bought back in 2016 for a little under $1,000 each. $10,000 I had into it. Pulled out a little over 300,000. I still have the other ones. I'm free rolling. If it goes to the moon, I'll make a lot of money. But I will tell you, it's tempting to sell them all. Problem is, who wants to pay the taxes? If people like me, who are willing to sit on an investment for 9 years or 10 years or longer, are liquidating, what does that tell you? So I talk about the speculative end, because if the speculators, if the people who pumped up a certain market over a long period of time, created a narrative, spread it, got people to believe it, and then sold a lot of them before year end last year, what does that tell you? Not only about that market, about crypto, but about what might be coming. When do people like to have a ton of cash sitting around? It's only 5 letters. Go ahead and type it in. When would you like to have a lot of cash sitting around? Yeah, when the markets crash. I'll go back to what I said a couple seconds ago about being in the room, about money and power. And think about what this administration has been doing. I started by talking about what happened in Minneapolis today, but I think that's just like opening the gate where the herd is and then introducing wolves. You're going to get chaos at some point. And when that chaos is going on, it's easy to steal. Wall Street Journal just put out an article talking about how it seems as if, and the evidence suggests, that somebody in the White House has been selling pardons for between $1 and $6 million apiece. Think that through. They were able to figure out the number. So when anybody says, oh, the mainstream media doesn't know nothing, bullshit. Some of these journalists are so good at uncovering facts. The real beef that people have with them is that the facts fly in the face of their belief, of their rationalization of the universe. For those of you who follow me on X-Twitter, I took my face off of there a while back for a number of reasons, and I put the Mandalorian on there. What is his saying? Those of you who are sci-fi nerds like me, what does the Mandalorian say? What is his 4-word catchphrase? That's right, this is the way. And I forget the name of the little guy that he hung out with in the desert. Somebody help me out. But I have that as my banner on my X feed now. What was his famous saying? I have spoken. It's kind of basically a sci-fi version of Forrest Gump. That's all I got to say about that. I think if you truly want to think at another level as an investor, you have to stop asking superficial questions. Tell me what the discounted free cash flow is going to be for this company. I haven't seen you do discounted free cash flow analysis. Somebody asked me that a while back. I got a little irritated. It costs $200 a year to get the discounted cash flow analysis from virtually every analyst out there. And you get them for free at all your brokerages. Why would I waste my time doing it? My job is to figure out where in the range of analyst expectations that we're going to end up. If you think that you're going to become a bottom-up sell-side investment analyst anytime in your lifetime, if you're not doing it full-time and you didn't do it in your 20s and work 60, 70 hours a week to have it drilled into your brain, it just doesn't, it's just not going to happen. Your better approach is to follow the lessons of Buffett and Lynch and use your common sense and your experience and say, okay, some of the analysts are right here in the middle. Some are at one end, some are at the other end. Who's more likely to be right and why? That's what I do. I used to do my own discounted free cash flow analysis. And I was like, why bother? My time would be better spent learning about the business, what they're selling, who they're selling it to, what the people who are buying it think, what their competitors think, what the employees think, and actually learn the business as if I were running it, as if I were competing with them. And I enjoy doing that. I have done some consulting to small and mid-sized businesses. If you can try to think that way, you're going to get ahead. Or you'll just go on a lucky run like me, be mostly right most of the time for 30 years, and at some point make a bunch of money. There are people on this call who did certain things right at certain points in their life, avoided mistakes, continued to make good decisions, who I may never catch in net worth. I'm flattered that they'll even talk to me. And I think that is where a lot of us have a lesson to learn. So we have to get over ourselves. Just think. Just think. Sit on that yoga mat and think. How does this really work? So when I tell you that speculation in the crypto markets seems to be falling apart from the top, the rich guys are selling, you should really, really pay attention to that. This is the Federal Reserve balance sheet. Remember that first chart about liquidity? Somebody pointed out that, hey, the Fed is printing money again. Kinda, a little bit, but that's after a big drawdown. And this was the straight up during COVID. And this was printing money too long. And now they brought it back. You'll see a lot of charts that are too short. Back it up a step and think about what's really going on. Some of you probably just thought, well, it's going up. Okay, why? Did you ask why? Who, what, where, when, how, why? Ask those questions. Teach your kids and grandkids to ask those questions. And at some point, drop on them, follow the money if they really want to know what's going on. Because some of you hear the things that I thought as a kid were shit, just constantly beat me in the head with it. Tell you what, all that stuff that got poured into me when I was 10 and 12 and 15 and 20 and 25, there is a saying, I forget exactly how it goes, that when you turn 30, you suddenly realize how many things your father was right about. Yeah, I had that epiphany right about at 30, 31. Who, what, where, when, how, why. Follow the money. You're looking at this chart, Federal Reserve Bank of New York, standing repo facility, which is now a permanent feature. Remember 6 years ago when we were talking about it? Oh, they have $1 trillion laying around, and now it's unlimited. And it's permanent. It's not going to expire. And look how little they've had to use it until just recently. The banks have problems, folks. At a time when they're loosening the reserve requirements and telling them to borrow more and lend more, the banks are having problems. Somebody isn't trustworthy in the banking system, and I would surmise that it's several somebodies, and that we are likely to get a banking kick in the teeth like we did back when Sovereign, SVG, and First Republic and a few others went belly up. It's coming. And I think it's coming this year. Because remember, we have $1 trillion of commercial real estate debt that's been rolled so many times that either they should just tear the buildings down and take the loss, or they're going to sell them for a loss. And I've seen a lot of these buildings go to auction lately. There was just a headline. Somebody bought a giant building for dirt cheap. I mean, literally like 15 cents on the dollar compared to 10 years ago. Think about that. Think about buying something for 85% less today than it was priced 10 years ago. Piece of real estate. Now, when you take a look at this standing repo facility, here's another little nugget for you. The banks are supposed to be able to give the Federal Reserve collateral that is U.S. Treasuries to be able to borrow from the Fed overnight. In December, the Fed started taking mortgage-backed securities as collateral and basically washing that money instead of giving the collateral back. So the Federal Reserve, even though they have been dialing down their mortgage-backed security purchases as they wound down quantitative easing and turned it into quantitative tightening, hasn't been so smooth because certain banks are like, whoa, we got a problem with this. I don't know how many banks are going to go into distress. I looked it up the other day. It's like 115 or 130 banks across the country are on the problem list. There's an actual problem list. It's confidential, but you can get the aggregate numbers, right? They don't want to cause a panic at any of the banks on the list. They'll just tell you how many banks are on the list. The number's gone up. Just to pull out that chart a little bit, that overnight repurchase agreements in the repo market, hopefully this image pulled out a little bit makes you think about it. Oh, this is the way it should be, and this is the way it is. So it's not the Fed's fault, as one CFO of a bank told me. It's the bank's fault for making a shitty loan. But then they say, oh, well, they did quantitative tightening. Well, it shouldn't have mattered. The loan should have been good. That's a problem of underwriting. And with the SLR getting loosened up, the reserve requirements getting loosened up, like almost immediately under President Trump, underwriting, I would suggest, is very likely to have gotten worse. Remember I warned you about Blue Owl, the BDC? I warned late last year and I warned early this year. Suddenly, Blue Owl is letting people redeem. Who redeems first? The people in the know, people who are in the rooms. If you own business development companies, I will just categorically say sell them all. I'm sure there's one or two out there, or three out there with great underwriting that it can hold up. But if that whole market gets whacked, why wouldn't you just buy it back when the share price goes down? If you own business development corporations and don't understand the risk that they have, you shouldn't own them, number one, just for that simple reason. But I will tell you that the risk in business development corporations has gone up, and it has gone up dramatically. Combination of underwriting and a softening economy, even though the narrative is that the economy is going to accelerate. Well, the economy isn't just AI and tech. That's about half of it, but there's another half. And that other half employs a lot more people. So here's the U.S. outstanding maturity, U.S. Treasury outstanding debt maturity schedule. 34% of all of our debt is due this year. This is going to jump and jump again because they are renewing the debt at incredibly short duration, sometimes 90 days. How do I know that? Here's the debt again. I guess I should have had these the other direction. This is Ray Dalio's cycle, and it would seem that we're somewhere over here. We are getting to a crisis point. And if you watch Foundation, you know that there can be multiple crises and unknown unknowns. I think we're going to get both. Short-term treasury issuance is dominating at this point. 70% of all debt issued is short-term. This is double line, man. I mean, it doesn't get any better than that. And they just keep recycling the money, and they keep squishing the maturity schedule. So this is going to be higher. And this, especially in 2028, is going to be higher because most of this debt is going to get refinanced at 2 years. So if most of this debt, 70% of it, gets refinanced at 2 years, and I think it's going to be higher, 21% on top. That's 21% of that, right? 70% of 34, say 21% on top of that. So that's another huge debt maturity year in 2 years. And this one will actually be higher because some of it will be 1 year and 90-day debt. President Trump has talked about just rolling the debt every 90 days. Think about what that means. All the 10 and 20 and 30-year debt, what do we do? And who's going to lend us new money? If we're just going to screw them an interest rate and everything essentially becomes a bank deposit through the government. Think about who lends us money. A third of our money comes from overseas. So duration just keeps getting shorter. What did we have to resort to when it was down here this time? Chart is just long enough. We had to do QE. They are forcing us into QE. That doesn't mean they'll do it without a crisis. It means that it's just going to happen, but we've never done it without a crisis before. Now, people say, the corporations are healthy. Yeah, some of them are. The tech and AI companies have done really well. Corporate free cash flow as a percentage of GDP has risen in line with everybody else's debt. Find me a better correlation there. And then take a look at what happened here and here and here and here. It's going to happen again. Margins at corporations have a positive headwind in the implementation of AI, but if they just keep hoarding money, and a lot of it just goes to the executives, which is why with 3,000 companies generating $1 billion a year in revenue, that's about right, about half split between private and public. It used to be 2-to-1 public to private, now it's about 50-50. The executives at those 3,000 companies, which essentially control the boards, right? There's very little board independence anymore. Shareholder rights are essentially gone. They've been working on that since the 80s. They won, right? It's all their golf and racquetball buddies who are on their boards. Think about the board at Tesla. They're all Elon Musk's friends. They just voted him $1 trillion pay package for a company that suddenly is losing money. Think that one through. The snapback here will happen, and it might not just be this sort of thing that happens. What if it gets all the way back down to here, which was the historical norm? What if these guys in government who have big piles of cash don't mind sacrificing the 10%ers so they can buy a bunch of assets cheap and then say to all the less educated people, see, we did it for Main Street. And then they print the money. Order of operations. Remember that? Remember that in math class? Order of operations. So while the tech companies are doing really well, expanding their margins, bankruptcies, the highest bankruptcies since 2010, since the financial crisis. Not everybody's healthy. I showed you this about a month ago, duration of unemployment. If you lose your job, you're probably going to be unemployed a while unless you take a significant pay cut, especially as unemployment benefits run out. And they're not being real generous on those right now. These things I just talked about, these last couple things, what does that tell you? What are they engineering? What are they engineering? Inflation is in the word, but it's not inflation. It's deflation. If they engineer a deflationary event, what does that mean? They can say that the price of eggs is lower, the price of chicken is lower, until there's shortages. I showed this chart a while back. Delinquencies are heading up on almost everything. People are giving back cars. Cars are becoming too expensive. And that's with, I got gasoline the other day at Costco, $2.10 a gallon. Now, that really has very little to do with Trump. He is providing some extra oil at the margin because of some of the things he's doing. But the reality is that we're just at the peak oil demand plateau, and we just happen to be at peak oil supply. And OPEC's adding. So OPEC's doing us a favor by adding supply because they wanted some things from President Trump that they got. You can choose whether or not you want to believe that. But if you decide to actually do the research and do the reading, not hard to see. We just took over Venezuela, essentially, because Rodriguez, the vice president from Maduro, sold Maduro out in exchange for an oil deal with the United States. There's no other way we could have done that raid in the middle of a military base if the fix wasn't in. Suddenly, Rodriguez is the president, not Machado, the Nobel Peace Prize winner who got like 70% of the vote, or her party got 70% of the vote, because she's not trustworthy. I mean, seriously, come on. So they did Venezuela for the oil, and they're going to be allowed to just wipe out the cartel, which, honestly, I'm liberal, but I don't really have all that much concern for bad guys. Yeah, due process, things like that. I'm into that. But drug cartels are bad. I mean, let's face it. So delinquencies are going up. Let me throw out a number for you. 5 billion hours a year. What is 5 billion hours a year? I'll give you a hint. It has to do with autonomy. Uber, Lyft, taxi, and delivery drivers work over 5 billion hours a year in the United States. What happens if the cars drive themselves? What happens if the delivery trucks can do point to point by themselves? Now, there's going to be some people who still drive, some people who accompany a shipment. But what are we going to do with 2 or 3 million more people who lose their jobs? They weren't engineers, they weren't doctors, they weren't nurses. They were doing a service job because it's what they were qualified for or because what they were allowed to do. I know an award-winning journalist from Kenya who can't get a job in the United States, in a press job, in a PR job, that pays her more than being a masseuse. She makes more money being a masseuse than using her 2 degrees and having been an award-winning journalist that reported on Kenya and Nigeria. She would travel from Kenya to Nigeria to report on what was going on in the oil industry and in the government, just all the things that happen. That one prince that always calls you about lending him money, but that he'll give you more later. What happens if AI really starts wiping out jobs at the low end? People in the skilled trades or skilled services, engineers, none of them are going to lose work. They're going to change work. The nature of their work will change, but they're skilled, they're educated. They'll find something, maybe a little bit less money. Right now, the economy is 70% service workers. I mean, this whole thing about manufacturing has always been a bullshit thing anyway. We lost those jobs decades ago. And they're not coming back because the robots are going to do them. We are going to be 80 to 90% service jobs, and it'll be on a curve along with the baby boomers getting older because somebody's got to help them out. So the idea that reshoring is bringing back manufacturing jobs, horseshit. There'll be factories, and yeah, there'll be a build out, so there'll be some skilled work there, and then the robots will build things. Take a look at the robots at CES. I haven't had time to show those videos. I will eventually. I have the archive. When I get back from Disney, we'll go through the CES stuff. Somebody says we need miners. No. Look at Caterpillar. Caterpillar is building machines that do all the work of miners. If it's physical labor, if it's moving a big thing or building something, it is heavily moving towards automation. You're going to be amazed at what happens with home construction in the next 5 to 10 years. We're going to go from a housing shortage that we have now to a housing glut in a decade. Guaranteed. Guaranteed. Unless we allow more immigration again. These transitions in the economy are happening faster because of technology and the movement of capital. So I put out my punch card stocks list And you may have noticed that it was really technology heavy, not the stuff that made money last year for the most part. Some of it was, the big stuff was. It was all the things that were coming for next year and 2 years out. AI based cybersecurity, support for robotics, right? The machine vision, the sensors, so they don't squish your tomato. That's where the money is going to be made. It's not going to be in miners that are heavy capex, right? There'll be a jump in margins for a moment because of the technology, and then that'll be that. And because technology is so good, and we actually have machines out there now running tests, we are going to mine asteroids. If you have any doubt in your mind that we're going to be mining asteroids in the next decade or so, get them out. It's happening. Now, I think the big challenge is going to be getting a gigantic payload down to the ground. So there will probably be a space base. This is why I love Rocket Lab. There will probably be a space base, and they will send a lot of small loads down because that'll actually end up being more efficient than mining on Earth where you have to use a lot of water. And since we're lazy, and since we like to do things that are expensive because that pumps up the inflation in the system, because we like cool things, right? All this stuff is coming. And from the time it starts to get built up to the point where it's built up, that S curve is where you got to make your money. Buy closer to the bottom of the S curve and sell closer to the top of the S curve. Maybe that's what happened in crypto. This is from our good friend Michael Burry. Points out the growth of the cloud among the three major players has slowed a bit in the last couple of years. Now, granted, Oracle and some competitors jumped in there. But think about how much their stocks went up. CapEx is matching the tech bubble. We talked about this a few weeks ago, actually a few months ago. They're going to end up overbuilding AI. There's not going to be a shortage of capacity once they're done because a lot of companies will bet on the come, it'll never come, and then they'll go under, and then there'll be cheap assets out there. I looked at buying a building which had a 10-foot basement, had a road on one side. I was thinking about buying a building, $750,000 downtown Milwaukee, put my office on the second floor, put a coffee shop, maybe some Italian pastries on the first floor because you know me. And in the basement, so put servers. Now, interesting thing about downtown Milwaukee, there is a heating system that most of downtown shares. It's from the power plant, excess heat. Next to the power plant next to downtown Milwaukee pumps excess heat through pipes, heats up buildings. Well, I was going to put servers in the basement of my building to provide a whole bunch more heat, basically have floor heating, right? The floor would be warm because somebody suggested to me, somebody that I know, that the cloud was going to essentially be portable at some point. And I don't think he's wrong. I think that capability will exist. I think the problem is that they're building out so much of the cloud and the AI infrastructure all over the place that at the end of the day, there will be no shortage. We're going to get to the top of that S curve very quickly. So it's the use cases, it's that hidden growth that's going to happen, not the highly anticipated growth that's already priced in, that we have to look for. And that's what's on the punch card stocks list. I always bring up Pfizer. Nobody really pitches it as an AI play. I do. AI and their data, their checkbook, their people, they're going to start accidentally curing stuff. Happy accidents. Talked to somebody at a company this week, big tech company. You'd have heard of them. When I told him that, when I said, look, there's going to be happy accidents in AI that are going to be in pharma and biotech in particular, but a bunch of other places, he goes, yeah, absolutely. And he talked about energy, gave me a little bit of education about how the small modular reactors could work. Made a suggestion to me about a certain type of company. He didn't know if it existed, but he said it should. Well, actually, there is one. There is a company out there that does something that he talked about. And I'm keeping that close to my vest because stock is still cheap and I'm going to start buying it. It's going to go on the punch card stock list. Somebody else had mentioned it to me. Somebody else I respect, actually. And when this guy said it, it kind of hit me in the head like, oh, really smart people are talking about this. It's an energy play. And it's nuclear, which, you know me, not a big fan. But it probably makes sense. So when I say the AI infrastructure is going to get overbuilt, all you have to do is look at these charts out there that show the interwoven web of capital and finance and projects. We're going to overbuild, just like we did with the internet. And that's why the internet brought to you is super cheap. That'll be deflationary at some point. Right now it's not, but it will be. I don't know when. So I talk about valuations all the time. And people are like, well, but it doesn't really help me in the short term. You're right, it doesn't. You have to find the reasons that a valuation correction could happen imminently. And it might not actually be imminently, but it could be, right? The possibility exists. This is the Buffett indicator in honor of the now retired Warren Buffett. And it's at the second highest point in history. The last time was the end of 2021 when it got this high. And we got a year-long bear market. Almost reverted to mean. So if this comes back down here, or heaven forbid, we have a liquidity problem and it heads down here, this is just your run-of-the-mill bear market. This is Kirk the world's ending. How many of you are going to do that, huh? Oh, I'm going to buy right here, and then it keeps going down. If it does. Buy slow and at wide price points, small, and respect the momentum. And understand what can change the direction of a correction, which is big intervention. If the big intervention doesn't come, keep holding your breath. Just more market valuations, all the main ones. This is the Schiller, right? The PE10. There's all kinds of charts out right now that basically tell you what the average return is going to be over the next decade, give or take. Apollo just came out and said we're going to make around zero on the S&P 500 index the next 10 years. Again, that's presuming no inflationary policy, no QE. Big money to be made, I still think, is mid-caps. That's the safest place in the S-curve. If you can find the companies at the bottom of the S-curve and not make a mistake buying that stock, right? They don't fall off a cliff because of something. There's bigger money to be made at the bottom of the S-curve, but the safest money is in the middle. The S&P 500 might chop for a while. It might just be a single-digit return for a long time. And here's something else, and I don't have the chart up. The average year in the stock market, right, has been about 11% historically, about 14% since the financial crisis and the QE age. But there are very few years that are average. It's not a bell curve. So we're usually not within 3 or 4 points of average. We're usually more than 3 or 4 points in either direction. Interesting. So when you do your Monte Carlo simulation, to say, I'm going to average 11%, well, maybe. But what if you average zeros the first couple of years or a negative number the first couple of years? Your compounded return ends up being a lot less, even though the average per year was 11. That's why I build up my portfolio slow, like over years, and I wait for that big year to give me a jump. People get frustrated with it, but I'm getting better at the trading. It's been 30 years. I'm getting better. But I am terrified, because it happened to me once, of losing 30, 40, 50% a year. Since COVID, tons of money has flown into the United States from international markets. So we're going to come full circle here. It's almost like I planned this stuff, right? Come full circle. What am I going to say? Tell me what I'm about to say. What am I going to say about international investors? Come on, you all got a keyboard. Does that chart look right? What animal is that? That is a mother's zucking alligator, all right. I think the United States is the best place in the world to invest. I do, and I think that'll be true the rest of my life. I think that we, despite clearly trying to break it, still have a pretty good system. And we have the best geography on the planet and a military that can defend it, which we periodically use. Venezuela was small potatoes. It really was. It was one dictator wannabe selling out the current dictator, right? And our special forces got to do a practice mission. It's kind of like, I think, they're chatting it up to be like this great thing, military conquest. But I talked to somebody who's special forces, a ranger, a big deal ranger. And I know another one, I doubt if he'll talk to me. But this big deal ranger, retired a colonel, said to me, and he's a big basketball fan, goes, hey, think about playing in an all-star basketball game. And then he stopped himself and he goes, no, think about it like the Harlem Globetrotters against the Washington Generals. And the Generals didn't play any defense. That was his analogy for what just happened in Venezuela. The fix was in. So it was playtime. They got to practice. And then a couple days later, Stephen Miller starts talking about maybe we'll just invade Greenland. I think that's probably saber rattling. It's probably part of pushing them into cutting more deals with us. The thing is we didn't have to do it. They were already cutting deals with us on defense and minerals. And the Europeans went nuts. They said it would be the end of NATO. We would have to defend Greenland from the United States, right? War with fucking Europe. And we would seize all their military bases. And you say, well, they're not going to seize our military bases. They outnumber us. And we sold them all of our weapons. Yeah, sure, they could do it. So when you try to make sense of all this stuff, think about a couple of things. Why are they really saying and doing what they're doing? And I don't know there's a great answer for that other than follow the money. But I do think that there are some zealots, and I think borderline are real fascists, and I think borderline are real Nazi sympathizers and racists. And people who think that the Monroe Doctrine, or now they're calling it the Monroe Doctrine, makes sense. And here's the thing. Some of it probably does. Sometimes it makes sense to stand up to your friends. Say, hey, I need this from you. Okay, I can respect that. But when you piss off somebody so bad that they say, fuck you, we're not friends anymore, well, that wasn't worth it. So what happens if all the people floating, let's go back in time. Where the heck is my chart? If all the people floating our debt just when we need money say, yeah, I don't think I got it to lend to you, and I don't think I'm going to buy your stocks anymore. What happens if this alligator jaw just comes back down to this level? What if they pull out $500 billion or $1 trillion, right? $500 billion, $1 trillion. What if they say this $500 billion or $1 trillion would be better off building stuff for us at home? What if it's Europe first? What if it's Asia first? What if it's India first? What if it's OPEC first? Which, as I've told you, they are the Ferengi, so it'll happen eventually. This is going to close. I don't know if it closes all the way. And that's just, right? That's just the equities. Where do we get 4 or 5 or 6 trillion extra dollars this year? Where do we get a few trillion next year? And where do we get 4 or 5 or 6 trillion extra, depending on deficits, in 2028? We are about $15 trillion short the next 3 years, give or take. Hard to know exactly, but give or take. And we are getting to the end of the decade, which is when I told you for a long time, that is when the baby boomer peak expense hits. We are getting to a crisis. I have no doubt that we'll print our way out of it. I suspect that we do things the wrong way. I suspect that the order of operations isn't great. I expect that too little is met with too much, right? First, not enough money, and then too much money, and not allocated well. What did we learn from COVID about money that's not allocated well? It's easy to do what? Rhymes with seal, yeah, or skim. So if there's a crisis and you got to bail it out and you got to spray paint money, it's not going to get stolen or redirected. So I didn't really just talk about this year. The reason I suggested that maybe a double dipper was coming was because of this, and then this is going to be up there again once they refinance this, right? Because they're not going to refinance this out for 10 years. Rates aren't low enough. And the only way they can refinance it out longer is if interest rates crash, which means that everybody thinks that everything's going to be horrible. We have no long-term debt. We have to figure out a way to spread everything around. And I've told you there is a way to do it. Very simply, you use Social Security, which is about $35 trillion short through the end of the century, which happens to match the federal debt. Kind of heck of a coincidence, huh? Since we started deficit spending in the early 80s, when Social Security was fully funded, to now, the deficit in Social Security exactly matches the federal debt, which roughly matches the increase in 1% wealth. Basically, what we did is we funneled debt to the general population, and instead of funding Social Security, we enriched the richest 1% of the people. And honestly, it's not even the richest 1%. It's about the richest 1/3 to 1/2%. It truly is the billionaires, because the tax laws are in their favor. The regulations are in their favor. Virtually every law is in their favor. And when I say the tax laws are in their favor, and I always have some blockhead say, well, they pay the most in taxes. Well, and they should. There's very few billionaires who made everybody's life better to make that money. The proportionality is not there, right? Why is Elon Musk the richest man in the world? He really hasn't made much money for anybody. 25 years. Did he make any of you money? Made the stock market money, but that can evaporate. How many of you have a Tesla? How many of you made money on the spaceships exploding? Which, as cool as it is, and I'm looking forward to seeing a launch next week, right? Just the proportionality of what's going on and the skim, the creation of debt to fund wealth enhancement at the expense of the retirement system has to come to a head. Now, if they try to do austerity, we will get a depression. And the odds of depression have gone up, because I don't know if people are going to stand up for themselves. I really don't. Or I think they'll just fight with their neighbors, which is what we're seeing. That's why ICE is out there. ICE isn't out there to really get rid of immigrants. Are you aware that there's no extra deportations today versus under Biden or Obama? It's all about the same. It's just higher profile and violent. I have no problem with them going after the worst of the worst. But somebody who basically had to crawl into the country or float into the country to try to make a better life for themselves, that didn't have the proper paperwork, A, we probably need them in the labor force. B, sure could use a few more kids. C, if we're nice to them, they'll be super grateful. And they'll be great citizens like everybody else who's come to this country, been grateful to come to this country, like us, or our grandfathers, or our grandmothers, our aunts, our uncles, our cousins. A lot of people listening to this had family that came to this country post-Civil War. We're almost all immigrants. And the people who aren't immigrants, we did not treat very well. Does everybody know what the Statue of Liberty actually was called in the poem? Mother of Exiles. It's who we all are. And I think we might have forgotten that a bit. At least some of us have. And I think that's going to come back to bite us in the ass pretty soon. I think the world's going to remind us. I think they're going to pull $500 billion out of the stock market, maybe $1 trillion, probably $500 billion. Hard to move that much money. But I really think they're not going to give us all the trillions of dollars we need for the debt. And that's going to cause something called crowding out, because the government will have to borrow it first. You can clearly see that they're on an austerity kick, and that means that the crisis could be worse, and then they'll finally print the money. Now, here's the weird thing. It might take a long time to get to printing the money. We might have to vote people out. That takes time. So as you handle your money, you do your investments, understand that the macro and the politics play a role. So as you do your investment planning, understand that the politics can have an impact. And if a lot of the marginal money has been the millennials who are losing jobs and the international investors who pumped $1 trillion into the stock market, and now President Trump said today, stop buying back shares, right? He said it to the defense companies. He's going to say it to everybody. He's going to say it to all the industrial companies too. And then he'll say it to the banks. There are dominoes lined up that if they get tipped over, it won't be a 20 to 30% run in the mill valuation correction. It'll be something worse. And it might come in 2 or 3 pieces. Now, until it happens, until the dominoes get tipped over, you still invest in a handful of your middle of the S curve, catalyst-driven stocks that have growth and good balance sheets. But I am still, as of today, I'm right around 50% cash. I have some covered calls that look like they're going to get called away. And I have some cash secured puts that look like they're going to expire. So I think I'm going to be really close to that 60% cash in 2 weeks. And then I'll evaluate. What's going on. Maybe the world suddenly gets better. That would be a pleasant surprise. I don't think we've had our crisis yet, and I think it's coming. But I wrote about the dot-com crash coming. I was young and nobody listened. I talked about the financial crisis. I bought dinners for people, and I told them what was going to happen. I got fired more than I got hired. I told you to sell almost everything before COVID, and then to buy it back. And we didn't buy back fast enough because of the QE. I didn't understand how much of an impact that was going to have and how fast and how big. It was new. Kind of got it. Vertical. We had never seen vertical before. All right. Everybody have a good night. I will get this edited. The Punch Card Stocks video is up on YouTube, and this one will be out by Friday, for the weekend. Okay? Have a good one. I'll have the article out with all these charts too. All right. Take care.